Time to do some Top That Trade with Phil and Alan. Phil's a Fox Business Network news contributor, and Alan Knuckman is the chief market strategist at bullseyeoption.com, here for our trader game. Round number one, slowing growth. GDP for the first quarter is back below 2% as the Fed keeps interest rates high to bring down inflation. But what does this mean for the market?
Well, you can't have it both ways. People want the economy to slow down. Inflation is still around the 3% level, but the best in the world. Let's look at the markets. The markets are 5% off the all-time forever tip top as far as the S&P. And actually, as I look at right now, the market's live, we've only had one day since February 22nd where the S&P closed below 5,000. We're still okay.
The stock market's doing great. Probably due for a correction, could be healthy a little bit, but inflation's not doing good. You know, the average person on the street is feeling the pain, and inflation is at the highest we've seen in many, many years. So anybody at the grocery store isn't going to be happy. Just as long as you have your 401k, though, things will be great.
Round number two, Moo Fund Fund. The VanEck Agribusiness ETF, known as Moo, is down 15% in the last year. What would be your trading move?
You know, we've seen money sucked out of the ag sector into things that look really tight in supply, like copper, like gold and silver, and the Magnificent Seven. But right now is a turning point, I think, for all commodities. We're in a super cycle. Things are in waves. And right now, the waves are going to flip back to grains. Right now, the grain market is starting to see the signs that the market has been ignored for too long. And when that happens, get ready for
risk reward. It's about risk reward. Now, the Moo ETF is a good example. These are companies that service the agricultural sector. So you've got the companies that do the fertilizer, the tractors, and so forth like that. It's got a great chart to make a bottom base here. I love the risk reward in MOO.
Round number three, NVIDIA and Facebook fall. It's a tough earnings season for some tech giants. Do you think tech is in trouble?
Profit-taking pullback until proven otherwise. NVIDIA needed to have some profit-taking. We saw Meta drop 15% after rallying 115%. That's just common sense. That's just common sense. So you want to see how these markets hold these pullbacks. And actually, Meta came back and filled in a gap that from long ago when it went straight up. So markets often come back to the breakouts, and I like to see that.
Yeah, I think, you know, the long-term story on NVIDIA is real. It's not going away anytime soon. And people are salivating to get a break so they can buy back in. And you see that. We saw that in Tesla, for example. Tesla, everybody said, oh my gosh, doom and gloom on Tesla. And everybody was selling this stock. You know, one thing I've noticed with Tesla, when everybody is doom and gloom ahead of earnings, you know, almost every time it is a buy. And I think we had a 6 or a 7% rally as soon as the earnings came out.
Yep, 10% right away.
For the bonus round question today, ticker time. Can you spot the fake ticker? Is it Fed, rate, or INFL for inflation?
I would think Fed. I don't think you can do that. I don't think you can use Fed.
I think I agree. That was the one I was going to pick.
The Fed heads have nothing on you guys. You're both winners. Go to businessfirstam.com for where to see our show on TV.